Our next guest says a month ago he thought we were doomed, but now is one of the few times you can buy the future for basically free. Joining us from Baltimore this morning is Legg Mason Funds Management Senior Vice President Robert Hagstrom. Robert manages about $2 billion in assets. Also with us, of course, is Dominic too. Robert, it's been a while since you've been on the program, so good to have you back. You do own some of these financials. So far, what do you make of the bank earnings we've gotten?
Well, it looks to me that we're kind of suffering from an R&R issue in the financial sector. When I'm thinking about R&R, I'm thinking about revenues and reserves. And one of the things that's coming across the tape, I think, is that revenues are not as robust as you'd like. And there's some issue about reserves release. How much can you reserve, loan loss reserves can you release back into the system? So we have an R&R problem.
Well, Robert, one of the things, the R&R, the 1R is a little bit more of an issue for some types of banks than the others, right? The reserve releases much more for some of these commercial type lending operations, and then the revenues for the investment banks. So where do you put the money right now? Is it more towards these traditional banks or more towards the investment ones that have been beaten up so badly?
Well, they're undoubtedly cheap. I think what we're trying to get our hands around is the rate of growth. And you're exactly right, Dominic. You're trying to understand that revenue from a trading perspective on the trading banks or from a loan basis for the bigger banks, Wells Fargo and the rest. We're talking about a revenue problem from loans. Where I think you can get exposure in the financial sector would be the asset managers. If you look at things like BlackRock and others, I think they're extremely cheap. That's a call option on the stock market. We're very bullish on the stock market, and I think you can participate in the financial sector through these asset managers.
So you own BlackRock then?
Yes, that's true.
Okay. Now there's another R issue, which is return, right, for these banks. How do they make sure that, or how do they get the, how do they essentially return what they have on? Okay. I'm trying to get this question out, and I'm having a problem, Robert.
That's all right.
What I'm trying to say is, how do they earn their way out of this, right, in order to make sure that these stocks, as some say, value managers say, that these stocks are attractive? Yeah,
well, there are lots of ways that they can return the money to shareholders. One is their demand, and will there be loan demand coming back to the system? And that's a question of the strength of the economy. The other is an issue of loan loss reserves, and that ties itself to the economy. But the third is something that I think we're reluctant to talk about, is that it's a capacity issue. Perhaps we have just way too much capacity in the financial system, and some of that capacity needs to be burned off, and you may see that in the coming quarters.
So does that mean, Robert, does that mean consolidation? Is this a call that we could start seeing mergers and acquisitions? The number of banks start to shrink, and if it does happen, where do you think that consolidation happens? Who gets bought out? Who are the ones who stay in place after all of that?
Right.
Well, Dominic, it's a good question, but as you well know, the J.P. Morgans, Wells Fargo's, Bank of America's, they're already so big that they can't merge anymore. So it's going to be very tough for them. I think the other thing you need to be thinking about are potential reductions in size. You're seeing Bank of America and others looking at strategies about reducing the number of offices that they have out there, the number of bank branches. So it may be an issue that there's just too much capacity in people and bricks and mortars and others, and that has to reduce to get better in balance with the economy.
Robert, let's move away from banks for a moment. Apple is one of your top holdings, right?
Yes.
Are you frustrated that the company hasn't released or used its $6 billion in cash?
We are, Betty. We love the company. We have a high regard for the company and their returns. But I have to tell you, it's very frustrating to see a business with $80 billion in cash earning nothing for shareholders. I'd love to have clarity on that. I'd love to understand what are your prospects for that money. Where do you plan to use it? Where do you plan to spend it? And therefore, I can calculate whether that's a better return for me than maybe somewhere else. So yes, Betty, I think it's a big frustration among Apple shareholders. I'm hoping to get clarity on that in the coming days.
Well, what do you, in the coming days, okay, what would you like to hear from Tim Cook? What do you want them to use it for?
I'm speculating here, Betty, but I think there's two options here. One is the speculation on the street is that Apple wants to develop its own cloud, something similar to what Amazon has, and that they need that money to develop their own Apple cloud system. I understand that strategically. I just don't understand the returns that you're going to get from that. That's unclear to me. The other way would obviously just to return the money to shareholders via dividends or share repurchases. We still believe the stock is significantly undervalued. A very profitable way for owners of a company to profit from cash is for them to buy back that stock at prices below fair value.
Okay, Robert, great to see you and have you back on the program. Robert Hagstrom.
Thanks, Betty. Thanks, Dominic.